The wrong lender almost cost me $13,000. Today, I'm going to be talking about the 3 misconceptions I had when I bought my first house and how you can avoid them. So my first misconception was only focusing on the rate. I always hear from people that are buying houses, shop the rates around, see which lender has the best rates. And rates aren't the most important thing when buying a house. Don't get me wrong, it's one of the most important, but it's not the only thing that's important. So I think you got to look at it from a holistic perspective. And that means looking at the closing cost, the origination fees, the baked in fees, the amount of escrow funds that the bank is required to hold. There's a lot more that goes into it than just looking at rates. And I was very naive when I bought my first house. I called up banks and I said, "What's your rate today?" And every time they're like, "Well, it depends. Tell me more about yourself." And I just wanted a flat number, but as I've bought a couple houses, it's much more nuanced than that. So first misconception, definitely rate is not the most important thing. You can get a lower rate by paying more in closing costs. Rate is just one aspect. It's kind of like when you're going into a car dealership, they ask you how much you can afford to pay per month, when they can just stretch out the loan for 100 years and you can pay $199 a month, when that's not the most important thing that matters. So that was definitely the first misconception. And to get around that, the solution is to talk to multiple lenders. You want what's called a cost estimate sheet, and you need to compare and contrast them apples to apples. I made a template for how I do it for my clients. So if you want the template for wherever you're buying a house, it doesn't matter if it's in Maine or Texas or California, they're all going to be pretty much the same, and it's very helpful. So if you want the template, I have the link down there. It's just a Google form and it'll send it out. The second misconception I had was that I didn't want banks to pull my credit because it would ding my credit score. Now, I hear this all the time, and it is true. Every time you pull credit, it does ding your credit score. It is overblown how much people think it does affect it. So the people that are worried about their credit dipping typically think it's going to hurt them 50 to 100 points, when in reality it doesn't. I saw a US News article that said on average it affects your credit score by 0 to 5 points. Now, that's not going to make any difference in your rates that you're getting for anything. So that's definitely important to know. The second thing that most people don't know, which I definitely did not know, was you can apply to multiple banks for mortgages within a 45-day period. And then the credit score companies like Equifax, they will lump all those together as one hard credit pull. So let's say I go to Chase, Wells Fargo, and Bank of America in the same week, and I apply for loans from all 3 of them. On my credit score, in 45 days, it will show as one mortgage pull, because I'm applying for the same mortgage loan in multiple spots. So not only does it only affect your score 5 points on average, it's also treated as one pull. And not every company is treated as one pull. It's just all of them within a 45-day period is treated as one pull. So that would have been a game changer. That would have saved me a lot of stress, because I was worried about my credit getting dinged when in reality nothing happened. So I think I did go down slightly, but then the next month it went back up. So that's a very common misconception that shouldn't really even be on your radar. The last misconception I had was that I should only apply to name brand banks, that they're going to have the best rates because they do the most volume. Wells Fargo is the largest home lender in America. Of course they're going to have the best rates. So I did that, and in my experience, it turned out that sometimes they weren't the best. For example, this is what saved me $13,000. It was late one night. I just got the home under contract, and I was applying for a bunch of different banks. And I applied to Rocket Mortgage. Now, Rocket Mortgage, obviously, everyone knows who they are. They probably do the most advertising of any bank, I would say, or of any home lender. And honestly, they were on it. As soon as I submitted the application, within 30 seconds, I had a phone call and I didn't pick it up. And then within another 30 seconds, I had a text. Within another couple minutes, I had another phone call. So they were absolutely on top of it. And honestly, I think they had the best rate. They beat the rates of everyone else I applied to. So I was like, great, they're holding up to their reputation. They obviously spend so much money on ads. They're very popular. I've heard good things about them from other people. So great, let's go with them. And then I asked for the cost estimate sheet, which is what I referenced earlier. And that showed that my closing costs were $13,000 higher with them than with a local credit union. And I was very surprised. I thought, how could it be this far off? I know there should be some variability, a couple $100 or whatever, but $13,000 is insane. So I talked to them about it, and in that conversation, they were like, well, we have the best rates, right? But it cost me $13,000. And their rate was only gonna save me $20 a month. So in exchange for $13,000, my monthly payment was going down $25 a month. Now that's $300 per year, or over the life of a loan, what is that? $10,000, I think? I don't know. Not worth it, basically. So the name brand don't always have the best rates. It is important to apply to at least 3 and sometimes 5 or 6 banks, because the first one you apply to typically won't have the best rates. And you need to know what the actual costs are typically going to be. One final thing that I did not know is that banks can match terms of other banks on these cost estimate sheets. So it doesn't hurt to take one, and you take one cost estimate sheet from Bank of America, send it to Wells Fargo, and see if they can match it. If they can beat it, great, you got yourself a new best deal. If they can't, you go with the better option. So I think there's just a lot of misconceptions around mortgages because people have never had a mortgage before. It's daunting, it's a strange process. So those are my top 3 things that I learned when I took out my first mortgage.